G'day everyone, welcome back to Pete's Investing. Today is March 31st, 2023. This is the S&P 500 update. Just at a glance, looking at the three timelines, the daily, the 4 hourly and the hourly. On the daily, we're still in a pretty significant downtrend. If I scroll out, you can see that on the price chart, but that's shown by the CCI 1500 as well. Although there is some gain, the convergence is actually almost touching the moving average, which is a positive in terms of bullishness. On the 4 hourly and the hourly, you can see it's broken up through the moving averages, and that's a bullish sign on those timelines. Let's drill into each of them. So just scrolling out for a moment, you can see there is a support area here, a key support area, and a key resistance area drawn up here, but also this secondary or this primary resistance, this diagonal descending trend line, and the price is actually heading towards that descending trend line initially. Now I've drawn a Fibonacci between that high and that low. In terms of the recent highs and lows, and typically when the retracement happens much further than the 61% level, that's a bullish sign. And here it's actually reaching and gone beyond the 88% and reaching the 100% level of a retracement. So that's a very positive bullish signal, and it looks like it may actually reach at least the this descending trend line at the moment. So I'll leave this Fibonacci retracement there for the moment. Otherwise, we'll drill down on the higher time frame, the previous high time frame as well. On the 4-hour chart, again the CCI is broken to the upside and a bullish, and you'll notice here I did draw this diagonal descending trend line between those highs as the initial resistance area, and it's actually broken through that. So I'm going to remove that first diagonal line, and I've got a secondary line here, and that coincides with this daily descending trend line, so that's the same as that one. So at the moment it looks like, and that's a secondary level of highs and lows in terms of Fibonacci retracement. So that looks like it's currently floating around the 61% Fibonacci retracement. It may look, if it's going to rebound to the downside, it usually does it around this level, around the 50% to the 61% retracement level. But if it breaks much higher than that, and it looks like it may well do, and it reaches the 78%, then we may see it actually bounce from that diagonal line, or it may actually break through. So it depends on how it goes, what it really does there. That looks like it may be the next level of key resistance we're going to be looking out for. And on the hourly chart, likewise, there was it's pretty much the same sort of story as the 4-hour chart. It's in a bullish momentum, and it's reaching that level of resistance there. I'm going to remove that just to avoid confusion, and that's where we are with that. So at the moment, again, that high to that low represents about the 61% level I showed you on the 4-hour chart, so I'm not going to draw any more Fibonacci's on that one. So at the moment, cautiously going long. If we see a break above the moving average on the daily, then it's especially if it breaks above this descending line, then we're going to be more bullish moving forward in the coming days. So at the moment, mainly bullish momentum at the moment, unless we see a significant bounce to the downside from that resistance line. So to understand how to properly trade using the average down method, reference the links in the description below. Subscribe and like the channel. Support us more on Patreon in the links below. Thanks, and see you in the next video.